In the last decade, the market's gone up by double digits, and it's worked to be able to do that. But the next decade might be a whole different animal. When we look at the world of stocks, we look at the history of the stock market.
Yeah.
There are long periods of time, often 10 to 15 years, where the market has had no growth at all. And then those periods of time are followed by long periods of time where the market has had great growth. And if you look at the last 25 years, if you were to chart it out, you're going to see that the first 13 years of the market, it looks like a big W. 2 crashes, 2 recoveries.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Hey, what an August it's been. I always thought that September and October were the crash months. But guess what? We got a new potential crash month, really unusual. Hey, let's sit down, talk with Anthony Saccaro. Anthony, financial expert, been an analyst, advisor for many decades. Anthony, great to have you back on the show. So should I jump out of my should I climb up on my roof and jump yet? Or should I just sit back, sip my margarita, and pray to the gods of the stock market that it goes up?
Yeah, great question. And interestingly enough, we have not even been fielding those kind of questions from clients because this is just really a little hiccup at this point. We don't know whether or not it's going to stay a hiccup or whether it's going to turn into some kind of full-blown cold or even a flu. That always is a possibility. But those questions are the type of questions that your listeners and other people are always asking when we start to have this situation. Dow Jones down 1,100 today, down several percent between Thursday and Friday last week. And whenever things start to happen, people start to panic. And the reality is over that time period, the Dow Jones is probably only down 5 or 6%. I don't have the exact numbers. That is not a large number at all. We know the market's not always going to go up. And I think that a part of the issue of why people start to panic when the Dow or the S&P 500 drop by 5 or 6% is because a lot of people have started thinking that the stock market is a safe haven. And the reality is that's not the case. And to have something like this, a 5 or 6% drop, if 5 or 6% is freaking you out, you're probably invested wrong. You probably need to be in a little bit of a different position, or you need to have your mentality tweaked so to realize that you're invested right. But at the same time, you want to make sure that your plan is in place and that your plan is solid. It depends, Kerry, whether you are younger in life or whether you're older in life as to what you should be doing. If you're younger and you're dollar cost averaging, when the market drops, you get to buy more shares for the same dollar. This is actually helping you. You emotionally, you look at that and it's dropped. And you don't like it, but if you're dollar cost averaging, it's actually helping you. You're lowering your average purchase price. If you're a little older in life and you're withdrawing funds from your portfolio and you're having to sell shares and cannibalize your principal to get the income you need, this is actually hurting you. So it depends on what phase of life as to whether you are. But right now, we're not at a point where anybody should panic in any way, shape, or form.
Well, I'm not worried about the flu or a cold. And maybe not even pneumonia. I'm worried about gangrene here, Anthony. Are we going to start having to chop off pieces of the economy to save it, you know?
Yeah, it's possible. No one can say that it's not, right? If we go back to 2000, we had the tech crash in 2001, which was just around 50%. And then it recovered. And then, when everybody thought they were safe, the market got back to its record highs in around 2007 or so. Then all of a sudden we had the financial crisis and the market was down about 60% between 2007 and 2009. And then the market recovered. And no one in 2000 thought that we were going to have a 50% drop. No one in 2007 thought we were going to have a 60% drop. And so the question is that going to happen again? It could. But guess what? If you're invested right, it shouldn't matter to you. I don't want anyone to be in a position to where the stock market is going to get to dictate whether you can accomplish your dreams and goals. If you are in the early stage of life and you're dollar cost averaging and you're putting money in over and over again, and you have another decade or 2 decades until retirement because you're 30 or 40 years old, then you want to pray that we have a 50% drop, because you're going to get some massive discount on your dollar cost averaging. And when the market comes back, you're going to come out smelling like a rose. On the other hand, if you're within a decade of retirement, then the fact is that you want to be in a position where you're focused on living off of interest and dividends, and you're not having to cannibalize your principal in order to get the income you need, because I don't want your retirement dependent on what the market does. I don't want you to only be able to spend time with the grandkids, travel around the country to visit your family, take these international trips and all the bucket list things you want to do when you're retired. I don't want you to only be able to do that if things go well. I want you to be able to do that no matter whether the stock market is at record highs, and whether it's 10% off of its record highs in correction territory or close to it like we are now, like the NASDAQ is now, or whether we have a 50% crash. I want you to be able to retire on schedule when you want and not have it dependent on the market.
All right. So that's the key, right? And it's really a matter of you want to be able to sleep at night, right? And
100%. It really is. Yeah, it really is all about the sleep. And all about the investments that you have now. If you are retired or close to retirement and you're living off the interest and dividends, you're focused on the income, you're living off the income, then if you're invested right, your income is going to remain the same regardless of what happens with the stock market. If you take a bond, for example, and there's lots of instruments that work like bonds, but if you take a bond, for example, a bond is going to give you a fixed interest rate guaranteed for a specific period of time. And at that end of that period of time, you know you're going to get your money back. And it doesn't matter whether or not the market's up 50% or down 50%. The only thing that matters is that whoever issued the bond is solvent. So you still have to be diversified when it comes to bonds. But if you're getting income off of a bond, high quality bonds today are going to pay you 5%. If you're getting $5,000 per $100,000 in a bond, you can count on that income, whether the market's up 50% or whether it's down 50%, and you can spend that income and you can do all the traveling you want, and you don't ever have to worry about losing sleep because you're spending the income. You're not touching the principal. In my book, I use an example that's really simple, but simple's better a lot of times. And I talk about the fact that if you are cannibalizing your principal to get the income you need, you're eating the chickens. But if you are living off the interest and dividends, then you're eating the eggs. And what would you rather do? Eat the chickens or eat the eggs? And the reality is, eating the eggs, the chickens will always be there laying more eggs. And it doesn't matter what the economy is. You should still be able to retire on schedule and do the things you want to do.
All right. So, yeah, and you don't want to be eating your seed corn, right?
That's right.
Only desperation to do that.
Exactly right.
Yeah. So, all right. So what's the best path here? Assuming you got 10 years before you retire, what should you be doing?
So I think it's going to depend on your goals. But if you have 10 years before you retire, you're really kind of in that tricky period where you really need to start focusing on scaling back, starting to transition from a growth first mindset, income second, to more of an income first mindset, growth second. You got to start making that transition. One of the biggest mistakes, Kerry, that I've seen people make is that they wait until the day before they retire to actually do some planning. I'm a retirement planner. This is what I help people do. I've been doing this for 2.5 decades. And it's not uncommon for someone to come to me and say, hey, I'm retiring next month and I need to prepare for retirement. Well, in the last decade, that's worked. In the last decade, the market's gone up by double digits, and it's worked to be able to do that. But the next decade might be a whole different animal. When we look at the world of stocks, we look at the history of the stock market.
Yeah.
There are long periods of time, often 10 to 15 years, where the market has had no growth at all. And then those periods of time are followed by long periods of time where the market has had great growth. And if you look at the last 25 years, if you were to chart it out, you're going to see that the first 13 years of the market, it looks like a big W. 2 crashes, 2 recoveries, no growth, 13 years. And the last 14 years, the market has gone almost straight up. And if history repeats itself, we could have another decade or decade and a half where where the market is just flat. And when I say flat, I don't mean flat like EKG. I mean flat where there are major crashes, major recoveries, and yet they're all washing each other out and 0% return. And the last decade, you've gotten away with it, but the next decade, you may not be so lucky. You don't want to wait until the day before you retire to plan on it. You want to start planning about 10 years out.
Sure. So time is your friend until the end, all right? If I could just paraphrase you.
That's exactly, Kerry, that's exactly right. And then, the biggest mistake, the biggest concern that I have for people that are about to retire in the next couple of years is that we do have another 50 or 60% crash. It's happened twice in the last 25 years. You can't say it's never going to happen again. That just would be illogical. But my biggest fear is that you want to retire in 2 years and we have a 50% crash and your portfolio has been lopped in half and now all of a sudden you can't retire. And your retirement now is dictated by what the stock market does. And for the last 10 years, you've gotten away with it. But for the next 10 years, you may not be so lucky. That's the biggest fear that I have for people, the baby boomers that are on the brink of retirement now.
Mm-hmm. All right. So, hey, it's all about, if I can summarize it, it's all about what part of your life you're in, when your retirement's there. What if you're the kind like me who's probably never wants to retire?
Yeah, that's me too. You and I have talked enough off air to know that neither one of us want to retire. We absolutely love what we want to do. But what I do find, though, and even as I get a little bit older in life, is I find that I want to have the choice to retire. And I want to put myself in a position to be able to retire or to be able to do some of the things that I want to do in life, even if I don't necessarily plan on retiring. The other thing, Kerry, that you and I have to start thinking about as we, mature on a little bit, and a lot of your viewers have to pay attention, is what if you're forced to retire? We're all one health issue away from not being able to work again. And so what if something like that happens? So if someone, comes into my office and they meet with me and they say, I never plan on retiring, I'm never going to retire. Well, that's nice. But do you want to be in a position to where you can't retire? Or do you want to be in a position to where you can retire and then choose not to retire? And so by planning to retire, then you have the choice. But by planning on working, you might not even have a choice. So plan to retire even if you're not going to.
All right. Well, I figure I'm going to be on the Smith & Wesson retirement plan. Right? But hey,
they don't allow those in nursing homes, by the way.
Yeah. No, we've never gone to nursing homes.
That's right. That's right.
All avoid it. We got our planning. But hey, so what do you think what are 3 things you can do today to properly plan out your retirement, whenever it's going to be?
Yeah, absolutely. So, I think the one thing you want to do is to have a plan. A plan proves to be very valuable when we have volatility like we have now. If you have a plan based on your phase of life, a plan that has been tested, a plan that's not just you, someone that, most people don't know much about money, they don't know, but if you have a financial advisor and you have a plan that's in place, then the reason you have a plan is so that you stick to the plan. The reason you have a plan is so that when things go south, you have something to stick to. We have an earthquake plan in our home. We live in California, so we know that there's going to be another earthquake. We know what's going to happen if we have an earthquake. I live on the back of a hillside. We have fires in California. We have an evacuation plan. Only time you need a plan is when things don't go well. So we know what we're going to do if things don't go well. No good decisions happen when you panic. So the first thing is you got to have a plan. The second thing is you have to make sure you're invested properly for your phase of life, as we've really already discussed. That's the second thing. And then the third thing is I'm going to suggest too that if you don't have an advisor and you're doing it yourself, that you make sure that you get an advisor, someone who can help you with your plan. And you want to have the right advisor, because I find that most advisors out there, I'm going to say 90 or 95% of advisors are growth oriented. They're good at helping you get to retirement, but there's very few of us like we are here at Providence Financial that are actually income specialists that will help you in retirement. So I think those are good, 3 solid things, but it all is built around having a plan and sticking to that plan and not panicking. That's the purpose of having a plan, so you don't panic.
All right. So plan, because it's often been said, if you don't plan to succeed, then you're planning to fail, or the old cliche, if you don't know where you're going, any road will take you there. All right. So give us a little bonus fact here, something that can help you really get clarity on what's happening in the market now and why you shouldn't be panicking.
Yeah, first of all, as a nice bonus for people that are about to retire, I find that most people in retirement are afraid to spend money because they're invested wrong and they're having to cannibalize their principal. The entire world of Wall Street teaches you that you've got to spend down your retirement. That term is normal in language. If you're invested for income and you're living off the eggs and you're leaving the chickens alone, you don't have to spend down anything. And you know how freeing that is? When you realize that you're going to have eggs forever because you're not eating the chickens. What I find when I meet with people, and the funnest part of my job is getting with people and showing them that they can actually have more money than they ever thought and never have to worry about running out of money. And what they do then is that frees them up to spend more money and increase their lifestyle. It's been shown statistically that people that have these pensions that will pay for as long as they live, those people feel better, they sleep better at night, and they spend more money. And when you invest your income, you're turning your pension, or you're turning your portfolio into a pension. That's what you're doing. So bonus is that you can actually have a happier retirement, a better retirement, and spend more money and still sleep better at the same time.
I like it. I like the sound of it. Hey, Anthony, tell us where we find you, how we connect with you.
Yeah, absolutely. There's a couple of ways to do that, but the primary way is through my website, providencefinancialinc.com. My company is Providence Financial. We're in Woodland Hills, California, which is Los Angeles. If you just search Providence Financial Los Angeles, you'll find us all over the place.
I know exactly where you are. I've been to the hills many a time. Have friends that live there. Hey, if you got a question for Anthony, myself, shoot an email to kl@kerrylutz.com, and you'll find a link to Anthony's site in the show notes of this interview on financialsurvivalnetwork.com. And while you're there, please sign up for our free newsletter. Anthony, always a pleasure. Thanks for stopping by.
Thank you, Kerry. Great to be here. Appreciate it.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.